This is our Forex blog for July 31st, 2012. And like we do most days, our easy three-step Forex trading system first uses our currency meter to find which currencies are strongest, which ones are weakest, and then we look to find buys in the strongest trending currencies versus the weak, and we look to find sells in the weakest currencies versus the strong. This shows you each currency's strength or weakness on multiple time frames. Some days the currencies go one way all day, pretty much like the pound today, extremely weak all the time. Real-time trend is made up of multiple different statistical trend tools. Then we have the 15-minute trend, hourly trend, and daily, weekly, and monthly. In this case, the monthly trend's flat, so it doesn't show anything. Anytime you see that, you want to obviously buy that against a currency that's super strong on all time frames, which really there isn't, but the yen for part of the today, 6:30 to 9:30, was for the most part strong on all time frames. So you want to look for, pound yen sells. That's a high probability trade, very likely, to find a trade that's going to continue to move in that direction. And if the trade works, you're more likely to catch a bigger win, and a lot of times many multiples of what you risk. The goal is if you're going to risk 10 pips, you want to make 20 or 30 pips to make it worth your risk. And you're going to have losing trades, and you have to have winning trades that get back your loss and leave you with extra pips, which is your profit. That's the whole key to trading, and that's why we have statistical-based tools. We also use range charts, which instead of a regular time-based chart, 5 minute, 15, or 30, it's based on a certain number of pips per bar. Here's a pound yen chart, and you can see it was pretty much chopping around up, down, for most of the day. But you can see the momentum to the downside was considerably higher than the momentum, when it was going up. And basically that's telling you it's more likely when it does make its move, it's going to be to the downside. And you can see the daily, weekly, monthly trends on the bottom for the most part down. And, when that's the case, typically you don't want to trade a currency that's dropping around like this. But when it finally, breaks down and makes a lower low, whether you got short here or here, it's a pretty decent place to go short. You can also use, I've found this to be a very good timing tool. We've spent a lot of time and research working on digital signal processing techniques, and I find a very fast 5-period average shift to 2 bars to the right to be a good timing tool when you use our digital signal processing method. So basically, whenever you want to get short after a decent sized pullback, wait for one, and typically, depending on the currency, I'm looking for a 15 to 20 pip pullback before I get in the trend. So once you have a trend down like this, you can see it went to 122.40. I want it to move up at least 15 or so pips before I go short. So it's somewhere around here. And then you can see it closed underneath that area here. You would go short with your stop above the high. It's starting to work its way down a little bit. You can see there's not a whole lot of weakness, and you might get out of that trade with a small profit. Comes back up again. Notice it is not able to go above that high. Unfortunately, the strength is the same as it is before, and when it goes down again, you're short. And this is a decent method to look for shorts, because if you don't see a decent enough pullback, this tends to keep you from getting into a trade prematurely. You can also use fib targets to know when to get out of trades using this. You draw your fibs on there, and you can see it went right to that fib level. And this was the first wave down. This was kind of like a false continuation, then it reversed and went right up to the 38%. That's another thing you can look for pullbacks. Very weak trends pull back no more than 38%. And typically currencies that pull back and don't go over the 38% Fibonacci pullback tend to work their way down. And this isn't a very smooth trend down. It's a very choppy trend down. But it went right to the fib target. Another new tool that we're about to release, and it's an enhancement actually to our existing containment bands, and scalpers are going to love this. We have the digital signal processing in our containment bands. This goes back over the last 20 days, and it finds the maximum volatility. You can use a 5-minute digital signal processing center line and then draw on these extreme bands. Most of the time you're going to find reversals at these 1.5 bands. You can see pulled back here, went up, came real close to it here and the market was kind of dead, and went up to the upper one right here. Didn't even really go more than a pip above it. And this is a phenomenal method for getting in and out of trades. Now, keep in mind that a lot of our tools work live only. I'm going to showcase this on some other currencies right now. We'll start with the euro dollar. You can see the euro dollar here and how well our new bands did at containing price. Now, obviously here it went 10 pips underneath it, reversed up, touched it to the pip, reversed up, right here, went a little bit above it, came down, hit it right here, came down, hit it right here, went up, right here, went down 10 pips, went down 15 pips. This is going to be a scalper's dream, for those who don't have that much time to trade every day. Let's say you trade from 9 to 10 or 9 to 11 or 8 to 11. You spot these trades. This one right here went from 122.70 up to 1.2300, 30 pip win. If you had gone short right here, let's say you lost 5 pips, shorter again, made 15 or 20. And that's the key to trading. Small losses, big wins. Let's say you sat and saw this trade right here, you got short, comes down a little bit, comes back up. You got out of this pretty much a break even, comes up again, you go short, you make 8 or 10 pips on the way down. 10 pips a day, 50 a week, 200 a month, 400 every 2 months, doubles your account every 2 months. So 10 pips a day, you can get one of these nice trades today, write it down 30 pips, and you made 3 days worth of minimum profit. Buying right here, goes up 15 pips, you have a day and a half of your profit in about 10 minutes. Getting back to the currency meter, you can see the dollar's weak on all time frames, the longer term, daily, weekly, monthly. And when the weakness, the strength disappeared, usually currencies that have a couple hours of strength, or in this case, a little bit, about an hour and a half, they're going to revert back into the longer term direction, which is down. And so when this went weak a little bit before 10:30 right here, you'd want to trade a currency that is strong. You can see here the euro is the case. Right or a little bit after 10 o'clock is one of those times where you want to look for buys in the euro dollar. And you can see that this currency obviously has been going up today, pulled back. It really never went down underneath these lows, made a higher high here, higher high. This low here is just slightly lower than this low. And there's a lot of different ways of trading. You can obviously start drawing trend lines when the market's kind of chopping around in a range. Typically it's going to at some point have some kind of chart pattern like this where volatility gets smaller and smaller and smaller. And when that breaks out, when our currency meter is showing the euro is one of the strongest and the dollar is the weakest, the longer term trend of the dollar makes it one of the weakest currencies. It's very likely to go up, and you can see it did from 22.90, and this is a great place to get out of the trade. Even if you held it a little bit longer, if you had a trailing stop on there, more than likely you would have got out somewhere in here versus at 20, and you caught in a couple extra, more pips because of our much superior digital signal processing containment band. Let me just take that off there so you can see how much more rapid these are. The faster the moving average, the wider these bands are away. See that? Notice if you had got out of this trade right here at 12 versus 20, you left another 8 pips on the table. This one right here is way above the upper band. Notice how it's overshot it here. I think this low right here with the faster bands touched the band, but now it's underneath here, so you don't have this buy right here, which went up 20 pips. Let me put that back on here. See that DSP center line? I'm going to hit adjust, and you can see that it found that trade there that you wouldn't have had. The slower non-digital signal processing, and the math behind this is really complex. We hired a few DSP experts to help us craft our technology behind this, and it's just very fast, and because of that the bands rapidly adjust to rapid price movements, and it just gives you more confidence. It should, in my opinion, and for my own trading, this has already improved my trading. I've found trades that I wouldn't normally have had or found, this being one of them. So let's look at some of the other trades from the currency meter. And once you have currencies that you want to buy or want to sell, you could just simply wait till they hit the band, the lower band for buys and upper bands if their longer term trend is down and you want to sell them. Like the CAD, very weak, as you can see. Longer term from trend, real-time trends down, 15 hourly. The daily shifts down a little bit before 8:30. The weekly and monthly trends up, but this is one of the weaker ones. The euro would be a good one to buy against this weak CAD. You want to buy the euro CAD. So you could just simply, and I'll put on a 5-minute chart here. Euro CAD. This is one that you want to be looking for buys in because the trend supports it. So right here, it finally hit it, 23, 24. It's only gone up 10 pips. This one came real close to hitting it, obviously on this decent sized pullback right here. This is at 12. The band is somewhere around 10 right there. And again, let me just showcase this. We're probably going to release this later today or tomorrow. Some of the other things I'm working on, I'm still going to test before I release. But this one, I've tested it and traded off of it. If I adjust this, you'll probably find the band's a lot farther away with the non-fast digital signal processing line. And you can see price, shoots through these a lot more often than it does with the DSP line. This one kind of walked its way up there. Anytime you see a currency walk its way up, as soon as it comes down, you're likely to get 10 to 15 pips on a counter trend move. Let's look at one more example for currencies you could be, focusing on using this. Obviously, the pound, very weak. Strong euro, that would be a perfect one to, look for this in. Euro pound, and notice the lower band right here, almost again to the very pip. In here at 78.35, and it went up 25 pips. It's pretty amazing. And knowing if one currency has a daily, weekly, monthly trend starting the day off that's up and the other one's down, look to buy the lower band, buy the lower band. Obviously this one I just showed 100% success in buying the lower band when one currency is super strong and the other one's super weak. So this is another method that you will have access to either later today or tomorrow. And for those of you who are scalpers who only have an hour, half hour, hour and a half to trade, you only need 10 pips a day to do very well every 2 months and to grow your account very rapidly. So focus on the statistically high probability type trades like this and avoid other ones and, trade consistently.